All right, so to wrap up chapter 3, we are going to cover some of the other limitations on tax planning strategies. So these limitations can apply to any of the 3 strategies. That's why we have them broken out separately. And so these other limitations, the formal judicial doctrine names, are business purpose, step transactions, substance over form, and economic substance. And so instead of, just reading out the formal definition, I've kind of paraphrased the doctrines into a question that the doctrine is trying to answer. So for the business purpose doctrine, the question that this thinks about is this expense truly for the business? For the business. So, hence why it's called purpose or business purpose. So, I think the example that was provided in the textbook is, if you went on a business trip, the expenses for that business trip have a related business purpose. But if you tried to bring your significant other on that trip with you and deduct those expenses as well, your significant other being there isn't necessarily business related. For the step transactions doctrine, the question that this one tries to answer is, are all of these events related to the same transaction? Same transaction. So some activities, sometimes with the way activities can be structured, the way I think about it almost kind of seems like if an activity is unnecessarily complicated, like trying to have all of these steps in between, if they're all related, like it would be a lot easier to just combine it all into one related thing. In the substance over form doctrine, and I'm probably going to use a little bit of, definitely not accounting language, and I apologize, I'll probably use a cliche to explain this, but I think it'll help. For the substance over form doctrine, are you truly doing what you say you're doing? Or are you talking the talk and walking the walk? So I'll actually use the talk and walk the walk explanation. So talk the talk and walk the walk. So, an example of that substance over form doctrine. I believe the example in the textbook that they had used was a child could have been providing services for a parent, like just helping them out. And the parent provides a pretty large amount of money for that. I think the example was like, oh, the daughter was helping answer the phone for the mom. And the mom was paying, I think, $10,000 a month for answering the phone. And so the substance part of that would be, on the surface, hey, this is a gift that I'm giving to you. But if you go below the surface and think about what is actually happening, so this is the form part, the mom was compensating the daughter for a service that was being performed. So then technically that $10,000 was not a gift, but instead it was income, and that would be taxable. Then the last doctrine, economic substance, the question that doctrine is trying to answer is this transaction occurring for any other reason besides taxation impacts? So is transaction occurring for any other reason besides tax implications? Implications. So is there a valid reason for this activity to be occurring? Is another way to think about it. All right, guys, we made it through chapter 3. I know some of those beginning lecture videos were a little long because of all the practice problems, but I hope they are helpful for you, especially as you get to the homework, and it makes working those problems a little bit easier because a lot of those problems will be in the homework. With that, I hope you guys have a great day or evening, depending on when you watch these videos, and I look forward to seeing you in class in a couple weeks. Thanks.